So today we're going to be focusing on single accounts, T accounts, where we debit assets up and we credit them down. So let's get into some T accounts right now. So here what you're going to be seeing is the debits and credits interface with one T account. So as you remember, hopefully, if you've seen the other videos, the T is a learning. Now here is a singular T account. Assets, liabilities, equity, revenue, and expense. So any transaction in accounting is going to have a debit and a credit transaction. So the single account transactions are simply for your memorization of what goes up and what goes down. They're not real life journal entries. So here's an accounting equation or accounting schematic, and here is what a journal entry looks like. So you'll see journal entry always has two sides of the entry. So now we're going to go ahead and take our timer off and just be practicing with one T account. So this is just a theoretical. Okay, ready? I'm pressing the play button now. Alrighty, debits and credits, here we come. Expenses increase with a debit. So you see on this T account we have a debit on the left, credit on the right. And so increasing expense at bottom would be a debit. Selling, general, and administrative. There's two ways to approach this. If you're just starting out, the top account, you must first identify which of the 5 asset categories this fits in. Selling, general, and admin, or SG&A, is an expense account. Now once you understand that that's an expense account, then you can go ahead and increase or decrease. So increase an expense with a debit. So it's really a two-part problem. So here we have revenue, decrease revenue. Now we generally remembered that revenue increases with a credit. Now we just flip it for the decrease. You might want to do that if there's a reversing entry of some sorts. Otherwise, I like to say expenses as debits, revenue credits. On to inventory. The first step here is to identify inventory as an asset. We know debit cash up, debit asset up, increase inventory with the debit. Now this is decrease, so it's reverse, so it's a credit. Notes payable. Now that is a liability account. Liabilities are the opposite of assets. So all of this is to be memorized. So these are single account transactions. Increasing a liability is going to be a credit. Repairs is an expense. Increase expense with a debit. And so on and so on. You can just keep drilling. Decrease expense, the opposite of what's normal, credit. Retained earnings, increase with a credit. Retained earnings is equity. Now, let's take a moment here. What if I'm looking at retained earnings and like, what is that? I have no idea. Now let me show you what I would do. Coming back to the app here, I would just tap the very top of my screen, exit out, and I would look in this Learn section. I'd be looking for retained earnings. It's not there. It's not there. Wait, here we go. Equity, common stock, preferred stock, treasury stock, additional paid in capital, and retained earnings. So we know that equity increases with a credit transaction and decreases with a debit. So this learning section is dedicated to teaching you the ups and the downs, but also what category each account fits in. So this is a memorization game for the single T account, which is just representing the increases and decreases of the transactions. I call this accounting equation. You can also call it accounting schematic, whatever you want to do. Just know debits on the left, credits on the right. Now, let me just take a pause and reiterate that debits and credits have nothing to do with debit card or credit card or bank debits. These things are just going to confuse you. You really just need to think as to memorizing this, and that's about all. Okay, you just have to accept it for what it is because it's a schematic. Just like why the alphabet goes to A to Z, you increase cash with the debit in accounting. So just suspend your prior beliefs, memorize, and it's going to help you a lot. Okay? Getting back in here for finishing this out. With one T account, we could just keep drilling. You can also use a timer to see how you do. So this could be 60 more seconds, decrease the liability, debit, increase. Okay, so I'm just playing as identifying the account and crediting back. So just remember, with T accounts, you have this great learning reference where you can do the individual ones. Now, I would just like to say thanks so much for tuning into Accounting Play, accountingplay.com. I'm John Gillingham, CPA. If you have any questions or there's an issue, especially on the App Store, just please go ahead and email me, john@accountingplay.com. I'll be happy to get back to you. This another lesson in the series is going to handle 2 T accounts. So now it's more like a journal entry. So I think that will be even more relevant, a little bit more advanced, and we're going to also step it up to 4 T accounts coming up here. So please stay tuned, stay engaged, and subscribe. Thanks so much. Bye.